let's start with an introduction. Yago and Dan, perhaps introduce yourself a bit. You're going to talk about today, and I'm going to try and get Christine up here on the stage to introduce herself after you guys.
Cool. I can go ahead and kick off. So my background, I've been in the space for almost 9 years now. Built some of the earliest products, including Serial Block, which was the most popular mobile app in 2013. We got acquired by blockchain.com. Worked at Blockchain for a little while. Was the first product manager there, and then left for ChangeTip, which was the kind of an early Bitcoin micropayments company. Then worked at Uber, then did another startup which got acquired by Kraken. Currently lead growth marketing at Kraken, and most of you all know me because I talk about Bitcoin, and so that's how most people in the space know of me. Is I write a lot of content on explaining various Bitcoin topics simply, and so that's kind of what I'm known for.
All right, thanks, Dan. I guess, Yago, you'd like to introduce yourself for our new listeners?
Sure. So I'm Yago. I've known Dan for a while. I got into Bitcoin first in 2011. My background was in neural networks and machine learning, which I got to through neuroscience. I got into Bitcoin when I read the white paper by mistake. I thought it was about networking science, which in a way it was. Because of my I think for many years I'd been looking for technologies that could enhance people's freedom and bring property rights to the internet. And I recognized Bitcoin as the first real demonstration of this. And I thought it was, the biggest technology that I would probably see in my lifetime. So I emailed everyone I knew and told them that they have to get involved or watch Bitcoin because it's going to be the biggest thing in our lives. I remember writing to them, it's going to be worth $1 billion one day. I meant the entire network. And everyone very, very quickly ignored me. But I've been in Bitcoin ever since, and now I'm working hard on bringing smart contracts and decentralized ways of interacting with Bitcoin through a protocol called Sovryn, which extends Bitcoin's capabilities so that nobody who uses Bitcoin needs to use a central intermediary.
All right, sounds good. And yeah, that's what we're trying to do all day, extend the Bitcoin capabilities and let people trade, lend, earn, and do many more things with their Bitcoin. So we're very, very happy that you accidentally saw it and got to it. So thanks for that. All right. For some technical reasons, I can't seem to get Christine up to the stage. I hope that we can do this later, but we have a lot of people here who would like to start. So we already started basically, but would like to continue. So I guess we just do it, and as soon as Christine.
Hey, Christine, have you tried turning it on and off again? All right.
It works. It works half the time.
Yeah, 50% of the time it works 90% of the time.
Exactly.
Sounds good. Okay, so Christine, perhaps really try to turn it off and on and rejoin us, and then perhaps that would do it. Anyway, guys, we came here today to talk about Bitcoin, and let me start maybe let us start this conversation by talking about some Bitcoin narratives. So Dan, you had some previous article where you discussed Bitcoin's narratives. Maybe you'd like to introduce it and tell a little bit more about it and how it has changed since.
Yeah, so for those kind of unfamiliar, what narratives represent are kind of stories that people tell around why the price went up or down. At least in this context, narratives, that's what it means. And when we look at Bitcoin's journey over time, I mean, Yago and I have been around a long, long time. Bitcoin has gone through kind of like very many different narrative cycles that are sometimes correlated with the price cycle. And so, for example, back in the 2013, 2014 era, Bitcoin as a tool for merchants to save money on merchant processing fees was a big narrative. And then, I think more topically and kind of more recently, people definitely came around to the narrative, which I think is the stronger and most applicable narrative based on Bitcoin's utility, is Bitcoin being a good, gold 2.0 or store value asset. So I'm sure, if you've been around for a few years, you've probably seen these kind of ebb and flow. And then, like I mentioned before, sometimes these are correlated with price movements. So what's interesting in this space, and this isn't just for Bitcoin, this is for any crypto asset, the price goes up and then a narrative gets spun up as to why it went up. It's kind of a funny reflexive sort of path in terms of like there's not, you know, sometimes, for example, like a lot of these projects that you see outside of Bitcoin, there's just like, there's not really tangible traction. And so the price goes up and then people prescribe a narrative as to why the price went up. And then that product or that protocol actually starts to deliver on that original promise. So, it's really interesting to see how these cycles play out in terms of like the narrative woven with the price. It affects both Bitcoin and the other crypto assets in the space. I personally just watch Bitcoin the most, but I've seen the other ones kind of ebb and flow as well. But yeah, I think that's the topic of today is we're just going to jam on, kind of the different eras of those narratives and how those have played out over time. And then, kind of zooming forward to today and then looking at, what's the narrative today and how's that influencing price and vice versa.
Yeah, I would just add to that I think the interesting thing about narratives today um, is twofold. One, money has always been about a narrative, I think. I think there are certain things in the world that are shared stories. And without the shared story, um, people can't collaborate. How do you get strangers to agree on something? You create these shared stories. And these are the fundamental building blocks of civilization and ultimately of progress. But of course, they can also be very dangerous. So, like religions have always been a shared story. Um, and nation states and governments are shared stories. Um, the most powerful shared story we've ever had is money. It's the only shared story that every single culture basically agrees with, and which has really, really incentivized people and tends to incentivize people also in sort of rational ways to voluntarily collaborate. So narratives have to be something that we think about when we're thinking about Bitcoin because we're thinking about money, we're thinking about value. But there's a second part to this story, which is that everything today seems like it's totally based on a narrative, right? Like people invest in GameStop because of the story. People invest in meme stocks. Tokens are memes. Everything's a meme. And I think that part of the reason that this is happening is because when money itself becomes corrupted, which is what we're seeing now, then everything starts to lose connection to reality. Like nothing's real anymore because money are the points by which we measure value. And if you can't reliably measure value anymore, everything sort of becomes nihilistically valueless, and it all becomes about these games. And I think that that's a second big part of the of what we're happening. We live in the age of narrative, in part because we don't have a strong enough money to hold a good, strong narrative that can properly bind us back to reality.
Yeah, I think that's a great point of, money is the underlying measuring stick of outcomes in the economy, right? It's kind of like if we don't have a precise length of a meter, if we don't have a precise measurement of a kilogram, then how are we supposed to precisely measure economic outcomes? And when there's a central entity distorting that underlying instrument, it distorts many other things as well, because everything in the economy is measured by that. And we're seeing this, I think narrative-wise, I think meme stocks are just a really prime example of that. I mean, these are objectively bad companies like AMC. I'm sorry for folks on this call, on this space that are holding these assets like AMC and these meme stonks. what was funny is like everyone in the beginning knew it was a joke, right? Like everyone was like, okay, yeah, well, the reason why they're the most shorted companies in the market is because they're like really terrible businesses. And that's where a group of, retail traders started on our Wall Street bets was they were like, well, what if we short squeezed these short sellers, right? But the underlying businesses were terrible businesses. Like these are not long-term businesses. So what's been funny though is I've actually talked to a few people where they're like, yeah, man, I'm gonna hodl AMC, and I'm like, are you insane? What are you talking about? You don't hodl AMC. Like, congratulations if you day traded it. Sure, that was fun. Good job and nicely done. But to hodl that, like the money has been so distorted in this economy that people are now looking at like GameStop or AMC, and they're like, oh, these might actually be investments. Like people's just the distortion has reached to such a degree that people don't even know up from down, and like you've got Tesla, a company that is delivering cars, and yes, their valuation might be quite a bit more, especially from a multiple compared to other existing car companies. But you've got Rivian, and Rivian is an electric car company that has barely delivered any cars, and they actually get paid a fine to the SEC because they literally rolled their truck down a hill and used that as their product demo. And that company is worth like $80 billion or something. So when you distort the money supply, you distort the economy to a massive degree, and it causes misallocation of capital all over the place. And that's where I think we all kind of feel, like, am I the sucker that just doesn't get this new paradigm shift, this new game, or am I like, do I feel like a boomer just by by thinking rationally? And I think a lot of us probably felt that way in the crypto space, right? Like, you're like, am I a boomer for not buying all these tokens and these NFTs? Because like with this frothy, money printer go burr, increasing the money supply, that doesn't just influence traditional assets that also influences crypto. So, that's where we saw things get really frothy on the fringe. And so, yeah, it's kind of this weird thing of as humans, we exist on this, second by second basis every day, and we have this emotion flow through us when we see others doing well, especially with social media, because like narratives and content and ideas propagate faster than ever before. Whereas before you might have to read a newspaper, think about it for a while, and there wasn't such a tight feedback loop. But now you've got such tight narratives or such tight feedback loops, and narratives propagate really quickly, to where we always read about what happened in like Weimar, Germany, and all these other events where you're like, wow, how did those people behave so irrationally? But we're living in it right now. And for a moment, you wonder if you don't act irrational, maybe you're the crazy one. Maybe you don't get it. Maybe there is a paradigm shift. So it's been really interesting living through this personally, because then you start to wonder, well, this is what it probably felt like for a lot of people, and during these other bubbles or these other financial these other critical financial moments where there was not necessarily a paradigm shift, but such a huge distortion in the money to where it caused just a huge change in thinking across the board.
So, Judith, are you going to be asking us questions, or should we just free flow?
I just saw that you guys are flowing nicely, so I didn't want to interrupt. But
Yeah.
uh,
So okay, so maybe my thinking around this is I think Dan has been consistently over the years one of the best thinkers around um, Bitcoin narratives, both in terms, I mean, there's two ways to be really good at predicting where Bitcoin narratives are going. One is to pay careful attention, and the other is to just create the Bitcoin narratives that are going to take hold. And I think Dan's been doing a little bit of both. And so, one of the questions I'm interested in, Dan, in terms of your opinion, is what do you think has been like the big narrative changes? Maybe certainly in Bitcoin, but maybe other ones which are relevant to Bitcoin as well that you noticed over the last year, like 2021.
Yeah, so obviously the big elephant in the room would be gold 2.0, store value. That I think we had institutions across the world start to recognize that, and I think that's an incredible achievement. I mean, that was my original investment thesis for Bitcoin back in 2012, but people considered me a lunatic back then. So to see the, biggest funds in the world go, yeah, you're right, this does make sense, Bitcoin is a fantastic store of value, is incredibly validated, and also I think really exciting to see, because that use case for Bitcoin has very strong narrative market fit. Bitcoin doesn't need to go ship Bitcoin 2.0 to deliver on that promise. It's delivering on that promise today. And with money, time builds trust. And Bitcoin is has the most trustworthy monetary policy in the world, because, with the 21 million hard cap and that being socially enforced by the network, I think that what's beautiful about that is Bitcoin can continue to deliver value being a store of value for a long time. It doesn't have to pivot narratives. It doesn't have to improve itself to deliver on that. It's been delivering on that since day one. It's its strongest product market fit or protocol market fit, and it will continue to be for quite some time. Some interesting narratives that I thought, from an old timer's perspective, was the payments narrative started to come back in 2021 as well. So with El Salvador, first of all, I'm really supportive of that. I think that's super awesome. Like, seeing a country kind of go Bitcoin, I think is really incredible. With the caveat, of course, of like anything done by a government, I'm not necessarily really super keen on. But if a government is pushing people towards self-sovereignty, then I'm on board with that. I think that the payments narrative kind of sprung out of that El Salvador, kind of like, hey, Bitcoin is becoming a locally used currency in El Salvador. And so that the narrative kind of sprung forth like, oh, Bitcoin's useful for payments again. I do think that one was a little bit surprising for me. I mean, we just got off of the Bcash wars. Bcash, kind of like Bitcoin Cash was like this big payments narrative that Bitcoin's core utility is for payments. And we just fought that battle back in 2017, 2018. I don't think people remember how brutal that was, where it was kind of a brother against brother narrative battles of like people that I used to work with and were, really close back in the day. We were on different sides of the argument. I was on the store value Bitcoin side and they were on the payments Bitcoin Cash side. So, a lot of the arguments that we used against Bitcoin Cash back then still are applicable today for Bitcoin being used as a payment method. So I'm not really bought into Bitcoin being used as a payment method still. I still don't think it makes sense. And so it was weird to see a lot of Bitcoiners who formerly criticized the Bitcoin Cash community start to lean into that Bitcoin's useful as payments. And their argument was like, well, Bitcoin Lightning wasn't around back then. So Lightning is the big differentiator. And so it was more like a technical scaling solution. And I disagree with that fundamentally. I think my background's in product and marketing. And when we look at how a customer uses a product, it needs to deliver value to them. And when we look at a protocol, it's the same thing. And so when we look at Bitcoin being used as a payment method, Bitcoin has a really awesome use case as a payment method. It's immutable, which means it's not censorable. So if you're using Bitcoin to pay for something where you normally be censored, that's an awesome use case because it gives additional incremental value that wasn't there before. If you're using Bitcoin as a payment method for novelty, that's not really solving a problem for a customer. Yeah, and people go, oh, well, for merchants, it's great. But this is the exact same argument the Bcash community came up with back in 2017. I'm like, great, merchants like it, but there's a two-sided marketplace of consumers and merchants to transact. And of course, merchants like 0% fraud rates, but you need consumers to want to transact. And so it was really interesting seeing that narrative kind of spring back up. And a lot of people were like, oh, well, Lightning makes it instant and cheap. And I'm like, yes, that solves that problem, but there was multiple problems with the payments narrative, and that was one of them. The second one is that people don't really, if they don't own it first and foremost, if they don't store value in it already, why would they want to accept it? Or why would you want to accept Bitcoin if you don't believe in it? So there's a network effect, as we know, with currencies. These are all shared narratives, kind of shared beliefs. And when it comes to ownership, my belief is that medium of exchange and unit of account era of the money is far in the future. Whereas for store of value is the first one, where let's say 50 or 60% of the population now stores their value in Bitcoin. You reached a critical mass of network effect where people may prefer to only receive or send payment in that currency because the shared belief of that utility of that currency is really high. Versus, we've got a very small community of Bitcoiners as a percentage of the population. and not many other people want to accept Bitcoin as payment, or if they do, they'll just immediately sell it for cash. They don't create any sort of like lasting reservation demand. Um, and then, also there's a bunch of like usability points as well of like, it's still a little bit clunky to use. So I think that was surprising for me to see the payments narrative come back so quickly in Bitcoin, because and then see Bitcoiners kind of, just kind of shrug off, the sort of points that we used against the Bitcoin Cash community, just kind of shrug those off and be like, oh, well, it's different now. I don't think it is different. I think I think it's still too premature to say Bitcoin's useful as a payment method. And by the way, I mean, you can use Bitcoin however you want. So there's no right or wrong way to use it. I just think that like if you were to give a singular pitch to someone at a bar or at a restaurant, and you had one shot, you probably wouldn't want to lead with the payments narrative one, because it's only useful for a very, very narrow subset of payments, versus store of value, I think, is a unanimous narrative of everyone wants to preserve value. Everyone wants to save money. And Bitcoin offers an incredible instrument to go do that.
Awesome. I want to, I think you brought up 2 points that I'm very interested in discussing further. One is this digital gold narrative and its advantages and disadvantages, and the other is Lightning Network. So I think we should circle back to that. But Christine, you host a show all about Bitcoin, which I think is, if I remember correctly, called All About Bitcoin. I'm glad that you managed to join us as a speaker.
Hello, figured it out.
Yeah. So you have to watch the narratives kind of like the way other people watch the price daily.
Right,
So
right.
I'm curious. Yeah. So I'm curious what you've been like, what your experience in terms of sort of like the changing landscape of conversation around Bitcoin
Yes.
is, and is it as fresh, as it used to be? Like, how does it stay interesting in your mind?
Okay, so I'll give you some background. I'm a lawyer by training from Canada. I became a journalist, and because I get FOMO and I really want to, stay on top of what's happening in the present and the news cycle and the news junkie. And I had heard of Bitcoin in 2010, 11. There was Bitcoin conferences in Toronto where I'm from, but I thought of it as a passing fad. And it wasn't until 2016 when the ICO boom was happening, and obviously Toronto, the birthplace of Ethereum, and there was a lot of just enthusiasm, and I just couldn't. I remember looking at the price of Bitcoin at the time around $400, and I just couldn't understand why it was worth more than a share of Apple at the time. And that's when that's what really got me. I just had to understand what is going on here, and that's when I went down the rabbit hole. I tried to do all the research, talk to everyone in the Bitcoin community in Toronto at that time, and then just became totally hooked. I was with Bloomberg at the time, so I would insist on doing segments on crypto, whatever it may be, and eventually just continued on, briefly hosted on the side YouTube channels on Bitcoin, and eventually joined CoinDesk, where I'm at now. I was also with Reuters doing business news segments with them, now totally into crypto, covering it every day. I have a show at 3 o'clock. All That Bitcoin, as you mentioned, which Iago has been on, Dan Held has been on, and First Mover on CoinDesk TV at 9 a.m. in New York daily. So how have the narratives changed? Well, in the early days, I really thought Bitcoin was going to be used as electronic cash. So I tried to use it that way. That was what I tried to use. I bought Bitcoin to spend it, which in hindsight now seems incredibly stupid. But at the time I really wanted to explore and tinker around with this technology. So I bought nano ledgers with Bitcoin. I bought memberships into like groups that would talk about Bitcoin and crypto and security tokens, which was also big at the time. And I just wanted to see how it could be utilized. And I was subscribing to Andreas Antonopoulos and trying to understand, how is this going to be used as payments? And and at the time, and I still think it's still the case, it's a bit tricky to use with with transaction fees. With I had to figure out and experiment with BitPay and different payments, because doing it peer to peer or from one wallet to the next wasn't so easy for me. Um, so around the time of the fork, when Bitcoin Cash folks split from Bitcoin, I I I actually thought that Bitcoin Cash was going to win out because, they had the big players at the time, Roger Ver, Bitcoin Jesus, and the Bitmain people wanting to make this an electronic payments cash system. But obviously, we see now that the store of value narrative has won over. But I think Dan mentioned this before, that this cash payments narrative has again been taking over, or not taking over, but has been talked about with El Salvador. So I'm really interested to see where that goes, to see how this can be used beyond just a store of value, even though it is serving as a great store of value for many of folk. And in terms of a Bitcoin super cycle, I I'm really curious to know where we are in that, because we've seen highs of Bitcoin around $69,000 per Bitcoin. It's now just below $40,000 today. And, will this be a time where, similar to 2017, 2018, where, it peaked at 20,000 and, will stay years, months in the 10,000s or half that? Will we experience that now? Will it be months? Will it be years? That's what I'm very curious about right now. And I my impression of what happened in 2018 was that regulators put a scare in the markets, and it kind of triggered that crypto winter. As we had that ICO boom, and right now we have a DeFi boom, we have a NFT boom, the metaverse boom. And as regulators, governments pay attention to what's going on, and are now discussing stronger regulatory frameworks, that put a chilling effect in the market. So that's kind of what I'm watching. And I've spoken to Sam Bankman-Fried at FTX, and that's something he's really focused on for the year of 2022, is the regulation and just getting licensed in as many jurisdictions as possible, figuring out which is the most friendly jurisdiction right now. He was in Hong Kong, now he's in the Bahamas. And working really hard with U.S. regulators and trying to figure out, as the United States talks about and learns about crypto in the government level, how that will translate, and how they will eventually regulate crypto. That will be a very hot topic for the year. And it's really interesting to see how they are discussing it in Congress, how those ideas are evolving, and it could go either way. There could be more conservative clampdowns on the payments rails and on and off ramps into crypto, and whether or not miners are brokers, or I mean, some of them think that decentralized platforms should be brokers because they don't fully understand how decentralized finance works. So there's a lot of miseducation in there. So it's really interesting to see a lot of the lobbyists, like in Washington, D.C., trying to educate regulators on what decentralized finance is, how crypto works, etc. And then on the other hand, you have folks like Michael Saylor, who are just onboarding investors 24/7 in the corporate world, in institutional finance, legacy finance, and trying to educate folks into crypto. And I mean, I've heard of dinner parties he's had. He's so intense. He has folks sit down. They barely touch their salad, but he's drilling them in on the narratives of Bitcoin and trying to get them to invest in MicroStrategy or Bitcoin or otherwise. And he thinks that it'll be 100 trillion market cap eventually, which would value Bitcoin at about $5 to $6 million per Bitcoin eventually. So, today we're about $800 billion. And I think, Iago, you mentioned that you thought it'd be 1 billion one day. So that was kind of shortchanging Bitcoin in that regard. But so it really could go either way in my view. I mean, certainly the trajectory is up, but if we have a chilling effect from governments and regulators, and we have the Fed now tapering from their $120 billion government bond buying program, and that seems to have spread this risk-off sentiment in the markets right now. So remains to be seen for the year, where exactly the direction of Bitcoin will take.
Yeah, so I think, both of you have touched on a lot of interesting points, especially around the digital gold aspect, right? So for example, your story of Michael Saylor drilling people so that they can't even eat their salads. I think, one of the things that Michael Saylor does is he talks about Bitcoin as pristine collateral. His method is going into, well, at least putting his company into debt in order to acquire Bitcoin. He recommends this as a course of action for other people, which, I think is actually a fairly risky thing to do in terms of debt, but maybe not maybe not as risky as people think, right? So if we're going to continue to live in an environment where the Federal Reserve and other central banks can't allow the amount of credit in the world, to shrink, which would cause disinflationary pressure. In other words, it would cause the opposite of inflation, and that certainly feels to be the situation. Then we can expect to have cheap credit be around for a very, very long time. And there's an interesting thing there, right? Because Bitcoiners typically are extremely opposed to this idea of the credit and debt cycle. But in a way, the purpose of gold has always been to be sort of the asset upon which you can secure debts and build the credit market until that was taken over by fiat. And so if we do think of Bitcoin as digital gold, then that's going to be maybe the most important role that it can play. So I think that actually connects back to the payments and the way that it connects back to the payments is I agree with Dan that we're not going to see Bitcoin be used for payments anytime soon. People need to use a unit of account and a medium of exchange when they're making payments. And Bitcoin isn't either of those. It remains extremely volatile. It remains very exotic. And there a lot of people don't have demand for it. However, the ability to borrow against your Bitcoin, to create Bitcoin-backed stablecoins, to make Bitcoin-backed stablecoins on sidechains so that they're cheap, or on Lightning networks so that they're cheap. I think that's potentially a big thing that we will see. And I think that the way that gold entered into the medium of exchange realm was you had currencies that were backed by gold. You had the pound, you had the dollar, right, which were redeemable for a certain amount of gold, but people didn't use them as the medium of exchange. And so I think that there's, talking about narratives, I think one of the big narratives we might be missing here is the narrative of using Bitcoin as the basis for truly decentralized fiat alternatives, stablecoins, right? So having a dollar pegged asset but backed by Bitcoin, so that you know that it's redeemable, so that you know that it's uncensorable, so that you know that you're not you can self custody. You don't need a bank. This is a very, very big deal potentially, and we've seen how big stablecoins have become. It's a quarter trillion-dollar market at this point, most of which is centralized. And I think Bitcoin can offer a very, very credible and important alternative to that, something which is truly decentralized, something which you can actually own as opposed to an IOU from Tether or USDC. And I think a really interesting example of the way that could be used is if you think about El Salvador. El Salvador is a country which has two currencies. One is Bitcoin and one is the dollar. And you can effectively harmonize between those two countries by allowing the Bitcoin to be used to generate dollars, which would allow El Salvador to continue using the dollar, but would relieve them or free them from reliance on U.S. banking in order to create, transact with, and hold those dollars. And I think that's a very big deal potentially. Bitcoin as the next euro dollar, I think is a potentially interesting and important narrative that we should be paying attention to. So I'm curious, Dan and Christine, your thoughts on that.
Dan, you're muted.
Yep. Yeah, sorry, there was a little bit of a lag there. Yeah, I think, when it comes to Bitcoin and sort of like its capabilities of a smart contract platform and other utility, I've been a pretty big proponent and really excited about Bitcoin being used in like the kind of DeFi arena. So let's first start with defining DeFi or Web3. I think those are extremely difficult to define. I think in general, what they represent is permissionless, uncensorable, unhackable / like unseizable, and typically, there's a narrative of equitable thrown in there too. So that's generally what DeFi represents, is this more like permissionless financial system that's more equitable as well. Web3 also represents that in the form of like consumer products and content. And so, that's kind of the core ethos of it. And people build these DeFi and Web3 products typically on more like Solana or Ethereum. But there is the capability to build that on Bitcoin as well. And that's where over the last like 6 to 12 months, I've done an exploration of, like, for example, Sovryn, Stacks, Lightning, discrete log contracts. I think these are all super interesting and really cool. And people forget too that like Bitcoin multi-sig, that's a smart contract. So when we define DeFi and Web3, I would say like generally it's more sophisticated financial engineering on a blockchain, and it comes with all those adjectives that we mentioned before. I think that a lot of these protocols have like a bit of an unstable foundation, whether that be their monetary policy, whether that be kind of culturally or different design decisions. And that's where I'm really excited about Bitcoin and these sort of products being built on Bitcoin, where there's a little bit more of a solid foundation. At least that's how I think about it and why I'm interested in it. And so I think there's some really cool innovations occurring there. And certainly with all of these, there's a token can incentivize and also disincentivize or create structural problems. I don't think putting a token on something or just giving your users money is exactly a long-term sustainable strategy for growth and usage of your protocol or product. So I think there's a bit of like, there was during the kind of the hype cycle and this current cycle, there's a bit of, let's use a token as a panacea for incentive alignment. I don't necessarily agree. Like, for example, like, do I want to buy a Coke or do I also want to be a shareholder of Coke? I don't give a shit about owning Coke shares. I just want to buy a damn Coke, you know? And so I think that there was a lot of this like, oh, well, what if like customers could also be like shareholders? And it's like, I guess if you wanted to, sure. At the same time, I think there's a separation of that utility. I don't think you need to combine that utility. Um, and so when we look at, I'm getting a little bit down the rabbit hole here on some of the kind of like the core issues I see, but I'll zoom back out and talk about just in general. There are some really cool things being built on Bitcoin in terms of Bitcoin DeFi. I think some of the basic functions, as Yago brought up, lending and borrowing. So being able to lend your Bitcoin out and earn a yield, or borrow against it and take like a stable coin and use that to maybe buy a home or buy a car or something else in your life. And so I think that permissionless lending and borrowing is a very like kind of critical base function of DeFi that I think is probably the strongest product market fit so far. And I think that with Bitcoin again, its primary value is as the best monetary policy in the world, whether that be crypto or fiat, most credible monetary policy, and people can store value in Bitcoin with the existing functionality, with that existing framework, and not need Bitcoin to go ship Bitcoin 2.0. So, Bitcoin's already wildly successful in that regard. I kind of view some of this DeFi functionality as a nice cherry on top, as a nice additional value add for the Bitcoin protocol. And so it's been pretty fascinating looking at, Sovryn, for example, has a governance token and an AMM, and actually I learned about AMMs and governance tokens, and it's a very interesting sort of dynamic. Same with like the Stacks team, kind of digging in further as to like how they integrate with the Bitcoin protocol. I think, and then there's like a little bit more, like sans a token, so minus a token, you've got like Lightning and discrete log contracts, which I think are really cool too. So all of this being said, I think like, it's definitely a value add for Bitcoin to have some of this functionality. I'm excited to see people go build. Ultimately, I do find the experimentation kind of everywhere interesting. I'm personally, just really into Bitcoin, but I do find and I do observe some of the other experimentation that's going on in the space and find it fascinating.
And I'll just add to that. So with the finding functionality of Bitcoin, I think it is really important because we see frustration in crypto communities that, they want to see more utility with with crypto so that you can improve mass adoption. And for that reason, we've been seeing this alt explosion. And with Bitcoin's dominance, that has been in retreat. And, I don't know that it'll ever get above 50% ever again, as we see more communities venturing into other alts, other platforms to explore whether it is better transaction speed or, I'm thinking of, particularly lately Polygon and Ethereum have been, or rather Solana have been exploding. And, their whole intent is to have more utility, more smart contracts, more faster throughput, transaction speed, etc. But they lose out on the secure, especially looking at Solana. I mean, they've had some network failures, some, big time security and technical lag that just doesn't happen on Bitcoin. Bitcoin for sure wins out on decentralization, security of the network, updating, great teams that are constantly updating the network. So on that, Bitcoin is the leader, and it's the top cryptocurrency by market cap, and it continues to dominate the market. Whatever Bitcoin does, the rest of the crypto markets follow. But I do see that other folks are wanting to see more utility. And so with Liquid, with Lightning, with the layer 2 solutions, that's another narrative that I'm interested in seeing how that develops. Can these layer 2 solutions building on top of Bitcoin make it more useful, and will more and more people adopt and start using those protocols versus others who are just creating new layer ones. And in terms of investment, a lot of investment has gone to layer one um, tokens, to seeing how much traction, how much community they can start building. So it's interesting to see. I'm that's something I'm tracking and always interested in watching.
I think there's something really interesting about this aspect of it, right? So the internet was built by porn. It was the biggest use case. That and email basically were the two big use cases in the early days of the internet. And where porn went, everything else followed. So there was this sort of like illicit, kind of dirty, like pretty unimpressive use case in terms of it wasn't very enriching to human to human flourishing or the human soul, but it was what built the internet. Now, right now, what we're seeing is, and this has been for a long time, Bitcoin and crypto have been for gambling in the same way that the internet's been for porn. Today, if you look at the crypto space, I think the best way to describe it, it is the best casino that has ever been built. It's available to everyone in the world, 24/7. Easy on-ramps and off-ramps have been provided. You get to see a whole bunch of charts. You get to have friends in virtual friends that you can talk to about your gambling. You get to feel like you're not just gambling, but you're beating the market. It's a really impressive casino. It's the best. And a really great example of this, of how the casino is improving and changing, I think, is DYDX. So DYDX, for those of you who don't know, is a partially decentralized, non-custodial perpetual swap exchange, which is built on a roll-up, which rolls up to Ethereum, but really could roll up to anything. And it has, they've been building it for a few years, and slowly growing their user base and improving the UI, and then recently they exploded. And now they're bigger than many of the centralized venues. And I think they provide a really, really solid product. Now, perpetual swaps are, for the most part, a casino. But what they've shown is that you can build a non-custodial and potentially one day a fully decentralized sort of casino, which is as good or better than any of the centralized exchanges. If you can do that for perpetual swaps, you can basically do it for anything. And so I think there's, in Bitcoin circles, and this has been sort of like one of the narratives that I noticed this year. It's been and still is, the majority of sort of the most vocal Bitcoiners have been extremely dismissive of anything that's been built out of Bitcoin, right, outside of Bitcoin. And basically, everything's a shitcoin, everything's a casino, totally, everything's centralized. We can ignore everything. We don't need to pay attention. And Christine and Dan are not representative of this, but a lot of Bitcoiners have been, and this is a big part of what being a toxic maximus, so to speak, has been about. And I think this year we started to see a real shift. Well, this year, I mean 2021, we started to see a real shift of pushback as people started to realize you can't dismiss the internet because of the porn, and you can't dismiss crypto because of the gambling. And so we need to be looking and learning and thinking how this impacts the value proposition of Bitcoin, and how it can be, and this is the most important part, how this can be useful to Bitcoin, right? I mean, a lot of people do Bitcoin trading with perpetual swaps, but they also do Bitcoin lending, they do trading, and we want to do payments. And to the extent that we can make all of those things, we can get rid of the middlemen on all of those things by adding the capability to do that to Bitcoin. I think that's not just huge for the world, it's huge for Bitcoin.
And I think too. Oh, sorry, Christine. Did you want to go ahead?
I just want to say, in terms of, you mentioned porn and gaming, illicit activities has always been a hotbed for creativity because they're illicit, because they're restricted. They've always had to find other ways to flourish. And so it's interesting you say that because with illicit activities, they have to find creative, like criminal organizations have to find the most creative ways to get their products, if you will, on the market. And so it's interesting, like they are the ones who are going to use innovative technologies to get the services out there. On that note, and so sure, if the internet, if porn made popularized the internet, and gaming popularizes Bitcoin, and WikiLeaks and whatnot popularizes the use of Bitcoin, it's sure, like that perhaps can be and that's unfortunately why it has such a stigma attached to it, especially in the media. I remember in early days when I was reporting, I'd only report on Bitcoin if some sort of criminal organization was using it one way or another. And so that's the idea I attached to it. And before, understanding it and learning about it, which is a shame because, it's the very quick hit, kind of, what we hear constantly without really understanding what the technology is and what's going on. And so, but I think that is being alleviated. We have a lot of groups that are trying to educate the public. And I mean, the education now on Bitcoin is far greater than it was just a couple of years ago. So if you wanted to understand and once you do and understand, what can you do with this technology, how it can be used in other ways, I think we're still, I think we're in the teenage phase of Bitcoin. And so once we see those applications being drawn out, that's what I think is interesting going forward. But just wanted to throw that in there. Go ahead, Dan.
Yeah, I think I'm a libertarian, so I don't care what people use Bitcoin for. It's the entire purpose of it is that it's permissionless. And I do think that in the early days, Silk Road was a testament to Bitcoin's resiliency. A lot of people didn't know how it worked. There wasn't a lot of good content explaining how Bitcoin worked. But people could look at Silk Road and be like, well, I don't know how Bitcoin works, but it enables this, which means there's something special here. So I do think that from a libertarian perspective, I don't have any qualms at all with Bitcoin being used for various XYZ activity. It's used mostly for legal things. When we look at like on-chain, chain analysis data, transactions that are utilized in some sort of like scammy or illegal mechanism is, at all-time lows as a percentage of all transactions. So for 99 point something percent of all Bitcoin transactions are done for legal purposes. But of course, what's great about permissionless protocols is you can do whatever you like. Some things that are illegal are not immoral. For example, like drug use is, I don't think, an immoral thing. People are illegally allowed to take drugs that are prescribed to them. There's certain drugs that have been labeled illegal despite them having very little harm to someone. So that's an example of things that, I'm not personally a fan of. Obviously, illicit activities are also immoral, like, for example, theft. But I do think that, like Silk Road, like I mentioned before, was a testament to Bitcoin's resiliency, and I like seeing it being utilized in what I would consider a moral context. It's been really interesting seeing how that narrative of like Bitcoin is a Ponzi scheme, or Bitcoin is a scam, or Bitcoin's only used for money launderers and drug dealers. That narrative has like quieted quite a bit. I mean, I remember going on dates in 2013, and naturally, being the annoying Bitcoin guy I am, I would bring up Bitcoin on the date. And, because they'd ask me, like, what do I do, or what do I do for fun? And I'd bring up Bitcoin. And back in 2013 era, in San Francisco, which is a pretty, open city, like people were into all sorts of things, especially like illicit drugs. People were like, "Oh, are you like a drug dealer or money launderer?" That was like a question people had because the mainstream press had really propagated that narrative so extensively, that was widely kind of perceived what Bitcoin was about. It was like magic internet money for drug dealers. And I think with the Silk Road being shut down in late 13, with that kind of like taking a little bit of the spotlight off of that use case, or kind of that use in the space, with that happening, and then just I think kind of the narrative became tired over time with mainstream journalists. Big, you got to remember I've been around a long time, so it's been a little crazy to see these narratives with mainstream journalism, last this long. And I would say 99.9% of mainstream journalists' takes are intellectually dishonest or extremely negative just to be negative. I look and I get it. Like you're being paid to generate clicks. I get it. I get the content game, sure. But it's weird that they hold this like weird journalistic integrity thing, which doesn't really exist. And they hold this as the reason why they're being negative. And I'm like, well, you accept dollars for your salary. Like, do you write negative takedown pieces for the dollar? It's been really disappointing, I think, narrative wise, when I've seen mainstream press over the last 9 years, continually post objectively wrong information, and just seeing how harmful that was too. I mean, this stuff was objectively wrong, and I knew I was in, I was in a documentary um, with Kashmir Hill, who was formerly from Forbes, a really well-known journalist, and I know Paul Vigna really well from Wall Street Journal, Michael Casey, and Robert McMillan from Wired, and what's weird is like they still write wrong stuff. I'm like, guys, I've known you for fucking 9 years. How did you write this? Like, what are you talking about? This is objectively wrong. Like, this is wrong, and this isn't even a personal opinion. It just really kind of destroyed my trust in journalists in general, just seeing how bad and how misinformed these articles were. And most of it is purely for damage. It's not to give another side of the story. It's just to be completely disparaging to Bitcoin or anything new. So Bitcoin has struggled to overcome these narratives. These narratives are very, very pervasive. As I mentioned before, in the early eras, Bitcoin being used by money launderers and drug dealers. I mean, can you imagine being told that like 10,000 times at parties, dates, friends, events? It gets really, really old. And no one in crypto was propagating that narrative. It was propagated by mainstream press. But I do find a lot of this is kind of a negative rant, but I do find light at the end of the tunnel here with social media. With one of my tweets, I get more engagement than Bloomberg does in the entire day of their entire Twitter account. So for me, I do see a light at the end of the tunnel where individual content creators with social media have a strong enough voice to where we're taken just as credibly as mainstream institutions, as mainstream press, which we should. I know more about it than any journalist has written about Bitcoin. I mean, yeah, maybe there's a few who've really studied it, but I would say like, I think that is a somewhat unanimous agreement that most individuals who build products in the space or write content or in-depth content, 99.9% chance that they know more than every journalist out there who writes about crypto. So, I'm really excited about that. And Brian Armstrong, by the way, had a really good kind of tweet storm on this where he's like, we're just not going to talk to journalists anymore. He's like, with one of our tweets, we get more engagement than getting in Forbes or Wall Street Journal. So, this is kind of I think like starting in the crypto space. We're starting to see this permeate in other circles, but, Bitcoin challenges all of our assumptions over how the world works and narratives and everything else. But with mainstream press, it's definitely the case of, now the social media really circumvents this narrative process. Of narratives before were crafted by mainstream press, and now narratives can be crafted by anyone. And Iago, you brought this up at the beginning of the chat today of like, I've influenced the payments versus store of value narrative for Bitcoin individually, and we all do, by the way, no matter how big or small you are in terms of audience. But I think that's really cool because that really shows, like with social, we all have a voice. versus before there were these gatekeepers that would very much distort narratives super heavily to whatever sort of way they wanted to distort it. And I think this is a great era for Bitcoin where everyone can give their narrative of what Bitcoin is useful for and see what the market thinks of it.
I think, Judas, how about we give some opportunity for some questions in a moment, and then what we can do is we can circle back to the digital gold topic, which I think Dan and Christina both raised. It is a really interesting one, and I think it would be interesting to talk about the advantages and disadvantages and reality and unreality of the digital gold narrative, right? Because it is a narrative. It's one way of understanding what we're doing. Is it the right way? And then I think maybe one thing that I know Dan has spoken about, Dan and I have spoken about, and I found interesting is Bitcoin marketing, right? So Bitcoin doesn't have a marketing department as opposed to most other projects in the space, and it's to what extent is that advantaging Bitcoin, and to what extent is it a disadvantage? And if it is a disadvantage, what can we do about it? So I think those might be two interesting things to come to. And if there are people who wanted to ask questions, now could be a good time. Are there requests?
We had like 10 or 15 requests so far, but people probably got disappointed from not getting on stage. So sorry, guys. We know it's been a wild conversation so far. So if there's anyone who'd like to ask your question, just raise your hands now. You don't need to take them off. I write you all by the order that you requested. So even if you requested and then removed your request, I will see it and you will join by the order of requests. So just raise your hand and we'll put you on stage. When I put you on stage, just shoot your question so that we can proceed and everyone can ask that questions. So right now, I guess we'll wait for these guys to request to speak. And perhaps you can start with Gold 2.0 narrative, although I think that David has a question that he would be happy to ask. Or not? Okay. So yeah, Yagi, you want to take it from here? To everyone who wants to ask a question, just raise your hand and we'll put you up right after we finish this round. So don't go anywhere.
Yeah, so I think the biggest narrative right now around Bitcoin is this idea of digital gold. And Dan pointed out a couple of interesting points about it, right? So one is, I think that, the point that Dan made, which is really good, is that there's already product market fit around it, right? So we don't need to do, even if Bitcoin never changed, and maybe especially if Bitcoin never changed, this digital gold narrative is something it can already fit. And there's another big advantage of it, which is that it's very, very easy to understand. And then a third, and maybe the most important big advantage, is that there is only one gold, right? So if Bitcoin is digital gold, everything else has to be something else, right? Maybe your digital silver, right? Like Litecoin claimed to be. Or, I don't know what Ethereum would be, like digital uranium, a little bit radioactive, but maybe a lot of utility. So there's only one digital gold, okay? And I think they're important and powerful advantages. Easy to understand, doesn't need to change, and number one. But I think it's worth thinking about the disadvantages that could potentially come along with the digital gold narrative. And in some ways, I think it could prove out, it's almost selling Bitcoin short. So one big disadvantage of it is look at gold, right? So gold is an important asset, but not a very important asset. It's a $10 trillion asset, and of that, only about 4 trillion is actually held by people for the purpose of sound money or a hedge against inflation. The vast majority of the rest is held by central banks. So it's kind of a permissioned hedge. You kind of need banks, central banks and governments to adopt it. And then another big piece is used in jewelry, which is not something that Bitcoin's likely to be used for, right? So it could be that it's only, it's a fairly limited market, right? We don't know how limited, but it's certainly limited in comparison to, say, the $100 billion in government bonds, or the 100 trillion bond market, or 200 trillion real estate market. The other disadvantage, and I think this connects to it, right, is it can lure us as Bitcoiners into being overly focused on what I think is a fairly narrow use case. And so it's interesting to think why gold lost its standing as the reserve currency of the world, and why we don't live in a hyper gold, world, right? And I think, a lot of us hope to get to a hyper Bitcoinized world. But one of the reasons is that that gold was too difficult to use for ordinary people in a non-custodial way. And today we see that the majority of use cases for Bitcoin require a custodian, right? Require some kind of middleman. So exchanges are obvious, lending and borrowing platforms are obvious, ETFs are obvious, but also Lightning Network. The vast majority of usage of Lightning Network is through, non-custodial wallets because, custodial wallets, because the non-custodial uses are difficult. And then there's a whole bunch of things, right, where, like digital gaming or NFTs or all kinds of things where you could potentially, with Ethereum, you can trustlessly interact with these things, or with Sol, you can trustlessly interact with these other types of assets. Bitcoin, it's outside of, let's say, Sovryn, very difficult to do that. And so I think the digital gold narrative is important because, first of all, it's extremely useful in growing adoption now, but I think it's also instructive in thinking about, all right, do we want to end up really as digital gold, or do we want to do something more substantial? Because gold in some ways is actually, I'm sad to say for Peter Schiff, but it's a glorious failure in many ways. So Dan, I'd be interested in your thoughts on that.
Yeah, so I'm happy to play like devil's advocate too, with like the store of value narrative, and I certainly think looking at TAM. Can you mute? It was kind of going off. Or Sovereign, can you mute Yago there? So yeah, I mean, does be narrowly focused on the store value TAM? Total addressable market is TAM, by the way. Is that focus too narrow, and does that limit Bitcoin's value? So let's kind of like zoom out here, because I think this is like a common misconception that I see like a lot of people on the altcoin side doing. First of all, store value is the largest TAM in the space. So store value covers like all the fiat currency in the world, covers gold. So we're already talking tens of trillions, at least 50 trillion plus TAM there. Then we talk about real estate. Real estate is a $250 trillion market, and it's largely used as a store value asset. Yes, there is utility living there. However, almost everyone views a home as an investment. If you look at cities like San Francisco, New York, where a lot of people buy properties, they're just for investment only, not to live in. There are double-digit percentages of the city that with homes that aren't lived in. It's just used as a store of value. And that's really silly because like Bitcoin has far superior traits as a store of value, and real estate can be easily seized. It has maintenance issues. It also distorts the underlying market for the utility of a home. All of a sudden, homes aren't being bought to live in. They're being bought to speculate. And so that's a $250 trillion market. And so, okay, you look at Bitcoin's TAM here and you're like, all right, we're hitting we're hitting between like 50 and 100 trillion or to something of that degree. That's fucking massive. I mean, that is the largest TAM you can go after. So like first and foremost, that is the biggest TAM to go after in the space, and Bitcoin store of value tackles that TAM. So from a product perspective, when we go build a product, you want to have your product solve a problem for the biggest problem possible. And if you were to dilute the utility of it solving that biggest problem to go also chase another value prop that it could deliver on, that would be extremely poor product thinking. So I think the Bitcoin community, developers and everyone we've all really come together and I think very smartly chosen to spend most of our effort on store value because that's the biggest opportunity in the space. And Bitcoin doesn't have to do that much to keep achieving and crushing it. When we hear these other use cases where people talk about, hey, oh, well, how about like Ethereum or Solana, they're going to disrupt bonds and equities. That's bullshit. What are you talking about? Like you can't, or like real estate. Yes, Bitcoin competes with real estate, but these other protocols claim we'll put real estate on the blockchain or we'll put bonds on the blockchain. Okay, well, it doesn't really do much more in utility-wise if you put something that's rooted in the real world and enforced by governments onto a blockchain, because then you just end up defaulting back to the government's ability to moderate the outcome of certain events. So for example, let's say we put a share of Apple on the blockchain, right? Well, cool. Well, Apple's a company that is registered in the United States and then also controlled by various government U.S. regulations. And yeah, who cares if you put on the blockchain, because Apple could just choose to make more shares or not, or say those shares are invalid, or have the government force them to label those shares as invalid. So who cares if you have a trustless settlement mechanism for that when the underlying asset isn't trustless? So the only assets that are, really utilize a blockchain would be the native asset itself, Bitcoin or Ethereum or Solana, right? And so I think that that's really important distinction here, where when people talk about, oh, well, these DeFi platforms can disrupt all these other sectors. Yes, they can disrupt some sectors, but you're not going to put the whole bond market on a blockchain. You're not going to put all real estate titles on a blockchain, because then they go back to resorting to government enforcement of those contracts. So it's sort of like it's adding like a completely unnecessary layer on top of a settlement mechanism that exists in the real world, and then adding like this blockchain settlement mechanism, but it doesn't give you any more settlement assurances. You have no more guarantee that that asset's going to be delivered to you. So when they talk about this, I think it's a lot of fluff. I don't really think that's realistic to take real world assets and put it on the blockchain and quote unquote disrupt that, or that value accrues to them. There's also another way to think about this too, where a store value asset, the value accrued, the utility of the asset directly is correlated with the amount of money stored in it. The more and more people that store more and more value into Bitcoin, the more and more utility it has as a store of value, because of the network effect that occurs, because of the liquidity that occurs, so bigger and bigger participants can enter, versus something that's a utility token. So let's say, like when we look at, like, here's a great example of like when people talk about this in the DeFi space, they're like, if we disrupt equities, that's like $50 trillion or whatever. I mean, that's a TAM we can tackle. And they're like, well, this DEX like tackles that, or this DEX will disrupt that, and that therefore this DEX should be worth this amount of money. And you're like, well, wait a second. So like the New York Stock Exchange, what's the market cap of the New York Stock Exchange? It's all of the value of all of the equities that are traded at the New York Stock Exchange. All of that value doesn't flow to the New York Stock Exchange's market cap, or like it's the value of the company. Like it's a minuscule fraction of that. It's a micro, like an incredibly infinitely small, minuscule percentage. Bips. We're talking bips, not even an entire percentage point. Like if you took the entire market capitalization of all the equities traded on New York Stock Exchange, or all the volume traded every day, and then looked at the New York Stock Exchange market cap, extremely tiny. And by the way, I think I forget if it's New York Stock Exchange or New York Stock Exchange under ICE, because I think it's like a conglomerate. But the point remains, yeah, just because you allow things to be traded or allow assets to be moved does not mean that the value will accrue to the underlying protocol. And so I think that's a huge misconception in the space. Again, versus a store value asset where all of the value and the utility are intertwined. These are all combined together, to where the more and more value that's stored in it, the higher and higher utility it has, and it's this reflexive mechanism.
Okay, cool. So I'd like to discuss it, but I think we've got a bunch of people who would like to ask questions, and
Yeah.
that would be a good opportunity.
Yeah, we have Dow Chemist already here on stage. You can just unmute yourself and shoot your question, buddy.
Hey guys, thanks for having me. Great conversation. My question is, and I hear what Dan Held is saying, which is that the biggest use case for the space that he sees is store value. I don't think all the use cases are necessarily like antagonistic. I think they're complementary to that use case. And so my question is that as you guys are looking to add more utility to Bitcoin, right, there's a history of other projects that have tried to do the same thing. And I think that maximalism or similar ideology to kind of create opposition to other use cases outside of store value have kind of created an impediment or an inability to really embrace those other use cases. Do you think that, because I think you mentioned that you see maximalism changing, what is your definition of maximalism today? And do you think that it's something needs to go away, or do you think it still provides a value to the Bitcoin community?
Yeah, it's a great question, and I'm actually writing a tweet storm on that later this week on kind of like what maximalism and Bitcoin toxicity, what it used to represent versus what it is now. I definitely think in the 2017, 2018 era, that toxicity, that intensity was needed. We had to fight against flipping of Bitcoin Cash, and this was an incredibly huge battle. People forget that this was like a civil war. It was brutal. It was really intense. And, there was this big narrative battle, and Bitcoiners had to be unrelenting and had to fight back, and we won. We resisted a large collection of businesses trying to change Bitcoin, and that demonstrates Bitcoin's resiliency, and that is a good thing, and that is a great thing. I think that sort of toxicity back then was like a good representation of the Bitcoin network defending itself against being changed, and that made me more convinced than ever that I wanted to store value in this protocol. So that was kind of like originally where this word came from, like toxicity and like Bitcoin maximalism, of course, had existed before then, but kind of the more labeling of Bitcoin maximalist as more intense. And then, by the way, like Bitcoin maximalism was really propagated by Vitalik as a good narrative to kind of label Bitcoiners as conservative Luddites. It's a smart move. And people forget that Vitalik was a writer for Bitcoin Magazine. Like, he's an incredibly eloquent content creator, and he understands narratives intimately. I would say he's the best marketer in crypto by far, because he really understands these narratives well, and he's played into those to undermine confidence in Bitcoin. And so, I think when we look at, what's kind of Bitcoin maximalism and innovation and how do these all work, I'd say like I'm more of like a Bitcoin moderate, to where I'm excited with Sovryn and Stacks and what they're doing and work in building on Bitcoin. I certainly think like AMMs and other things that are going on in the ecosystem are super interesting. I've looked at those, and really explored how they function and looked at like governance tokens and what that represents. And so I think those are interesting. So like I'd say I'm more Bitcoin moderate these days, where I'm like, cool, that's interesting stuff. I'm still just interested in Bitcoin personally. And so, I think like Bitcoin maximalism and Bitcoin toxicity served a really good purpose back in the day. I do think it's reached a degree of like a little bit of like autoimmune issue, where it's gotten a little bit too much right now. I think after Bitcoiners defeated the Bitcoin Cash narrative and there was the bear market, there's kind of like, well, we don't really have a threat, but what do we go attack next, or what do we go defend against next? And so I think it started to focus inward and started to attack kind of the community itself. So that's why I call it an autoimmune issue, where we need that intensity to preserve Bitcoin's values. But I do think it's reached a degree that is not super helpful for some things. Like, for example, yeah, I've seen some intensity against like Yago and Munib with Stacks and Sovereign, and then I've also seen a lot of intensity against content creators. Like Natalie Brunell got a lot of flack for creating a paid course, like how to get people into Bitcoin, and she got a ton of flack for doing that. And I just found that really, really silly. Who cares if Bitcoin is a super capitalist technology, right? If Natalie has overpriced her course and no one wants to take it, then she won't sell any slots. If her course delivers value and people find value in it, then who cares how much she charges for it? They've subjectively decided that's worth it for them. And so she got a lot of flack from the Bitcoin community. and they called her like, oh, this is like a fiat mindset. This is like, the fiat mindset, or, you're a grifter, you're trying to take advantage of the Bitcoin community. And I've gotten this as well, like with my newsletter. Like people gave me a ton of flack for writing a newsletter and charging for it. But what's funny is like some of their own community members, like Seyfedin, has that too. He's got a paid course and he charges people to have dinner with him at different conferences. So what is like an appropriate level of like monetization of content? It seems super subjective between different Bitcoiners. And so, yeah, I thought that was like a good example of the toxicity, or the kind of like autoimmune issue reaching a critical point of just stupidity. I mean, that's just really stupid. There's other ones as well, and I got this tweet storm later this week that I'll be publishing. That really kind of goes through the whole list of different, like what I find like really subjective and like really silly, kind of like, I would say like a group of like really hardcore kind of fundamentalist types, that I don't necessarily agree with. So long story short, I think Bitcoin maximalism is, I think like Bitcoiners are justified, because people forget too that like Bitcoiners have gone through a lot of stuff. Like we've seen a lot of crap, right? Like we've seen a lot of bad projects. So a lot of people view Bitcoiners as like Luddites or conservatives, but honestly, they saw so many scams over the years, and I've been around 9 years, to where you become really critical of any new idea. You're like, well, I've seen thousands of these being pitched before. How is this one going to be different? So I get where I get where Bitcoiners are coming from, and I get where like sometimes that can turn a little bit, anti-tech, or like a little too toxic for the community. To such a degree that I don't think it's useful anymore. So, yeah, I think the future of Bitcoin is more about, you know I don't know, Bitcoin's a permissionless system. Let's see what people want to do with it, and I think that's kind of the core ethos that I have. And by the way, I've got to hop in a few minutes, so I'll be able to take one more question.
All right, so David, you're here back with us. Would you like to ask Dan something before he leaves?
Yeah, awesome. Dan, so do you subscribe to the hyper Bitcoinization theory, and how do you see that playing out? And then depending on your answer, I'll also have a follow-up if you don't mind.
Sure. Yeah. So hyper-Bitcoinization, for those who don't know what that means, that was originally coined by the Nakamoto Institute guys, Pierre Rochard and Michael. And the idea was like Bitcoin might hit a stage of like really rapid growth, or that like hyper-Bitcoinization basically means like when Bitcoin takes over the world, or takes over the three functions of money: store of value, medium of exchange, and unit of account, and does that in a more rapid manner. And so there's a saying, and I forget where it comes from, but there's a saying that says it took forever to happen and then happened in a second. And I do think that things play out a little bit faster, especially nowadays with social media and the speed of the internet. So these narratives that we talked about throughout today, when these narratives change really rapidly, that can cause price appreciation to change, and that price appreciation can cause reflexivity, where people go, "Whoa, Bitcoin's at $100,000 now. That changes my perception of it, and I'm going to start to deploy more money into Bitcoin." And Bitcoin hits $250,000 of Bitcoin, and then it keeps going. These reflex, Bitcoin's highly reflexive, and what that means, and that's from Soros. Reflexive means like it feeds upon itself. So the price goes up, people buy in anticipation of the price going higher, and that increases Bitcoin's adoption. So I would say like I do think, and this is like ties in a little bit to like more super cycle theory as well. Like, are we breaking the normal cycle? Would we have like a really intense bull run again? Maybe a more intense bull run than we've ever seen before, or maybe a more muted bear market. I think that when we look at Bitcoin's, when we look at like what the future holds, Bitcoin in the macro backdrop of money printer go burr, people losing faith in their government, and Bitcoin being accepted as a global store of value, there's never been more things in the right place for Bitcoin to start to trend to hyper-Bitcoinization.
Great. And then a quick follow-up on that. Generally, I think I'm in agreement with that. However, I don't think it's realistic that we can have a purely fixed supply money and have no other forms of credit or money outside of that. And we've seen that kind of play out with the Eurodollar and shadow banking market, where there was too big of a demand for money. And so credit had to be issued on top of the dollars, and hence the Eurodollar system was born. And so I think a more realistic scenario is where moving forward, everyone starts denominating all of their assets in Bitcoin, but all of their debts in shitcoins, which is the dollar, right? And so this idea of these Bitcoin-backed loans where you're taking out debt in an inflationary asset is actually the most financially is the best thing to do from a financial incentive point. And so I just find this idea of these kind of Bitcoin-backed stable coins where Bitcoin is our core asset, yet we still have some way to expand the monetary supply to apply credit to it is 100% needed. And a world where we just have Bitcoin as the asset and as the kind of debt is just not realistic. Curious if you have any insight on that or thoughts.
Yes. So there's 2 points there. One, there's still going to be debt issued when Bitcoin, like let's say there's my hypothetical scenario where Bitcoin's the only money in the world. There still can be debt issued. Like, for example, I lend out my Bitcoin to people who want to borrow it right now. And so that can exist currently. Just because there's a fixed money supply doesn't mean that, people can't lend or borrow Bitcoin. And so that already exists. And certainly in a system like this that would continue to exist and become even larger. I think that the breakthrough in Bitcoin, Bitcoin uses blockchain technology and uses this technology to build this sound money. And Satoshi's choice of the 21 million hard cap and our analysis of it, I think, is probably the most brilliant financial breakthrough in human history. When we look at variable supply monetary policies throughout human history, they always reach a certain conclusion where governments and politics become intertwined with the expanding and contracting of the money supply, which leads to big distortions in the market. And so I do believe that instead of having the money supply change to the economy changing, if the money supply stays fixed, the economy reorients and equilibrates around that fixed monetary policy. An example I've used, and I'm not sure if it's a perfect one, but right now you've got the Fed. And the Fed is, imagine it's a person driving a car, and the car is being the economy. And the path forward of where the future of the economy goes is on this road, right? Well, we can't see out the front windshield because we can't see the future. The Fed can't see the future. It's impossible. So what they do is they look in the rearview mirror. They look at historical data to influence how they steer the economy. And imagine if the gas pedal, brake, and steering wheel have a 3-second delay. So when that happens, you've got this car careening all over the road, and you're trying to drive the car by looking in the rearview mirror. That's impossible. I mean, what the problem with the Federal Reserve and central banking policies or flexible monetary policies is that it has an inherent information theory problem, which is the core underpinning of computer science. It's a physics-based problem here of information. There's no way for one entity to ingest, parse, analyze data, and then action on that data perfectly, because we're talking trillions of data points a second. What cereal am I going to pick out of my cabinet? What milk am I going to buy from Amazon? All of these things influence it. And so, the fixed monetary policy is brilliant because the entire market can use that information to reprice all these assets, and there is no change. So the economy reorients around it. And the analogy with the car analogy is, instead of having this car careening all over the road, we have an autonomous car. The car takes inputs and just doesn't change. The economy sort of reorients around the car. The car doesn't need to make these changes. It's an autonomous car.
Instead of it being the car, it's the road, and the economy is the car.
Exactly. Yeah, exactly. It changes the entire perspective of what it is. So, I think that's an incredible breakthrough, and that will lead to, we see these market cycles play out. Like the Fed kept interest rates too low with Greenspan, which led to the 2008 financial crisis. So if you look at the core root of most of these financial crises, you've got the Fed or some sort of centralized instrument playing a role in creating the crisis to begin with. So that's where I think Bitcoin's brilliant, and that's where I do believe in an economy where it's 100% laissez-faire, where there's very little government intervention, and that's what I think Bitcoin brings about, is that Bitcoin enables that to happen. Yago, thanks for having me. I got to run. Really great chatting with everyone. Christine, great chatting with you as well. David, great question. And thanks for having me, all.
Dan, absolute pleasure having you.
Thanks, Dan.
Thank you very much for joining us, Dan Held, right of the Held Report and Growth Marketer at Sovryn. At Kraken. Thank you very much for joining us. Now, I still see we have a few people on stage that want to ask their questions. So, Jaeger, as long as you can stay with us, and Christine, who's back with us, I guess.
I can do another 17 minutes.
All right. So by the order of questions, we have Nico, then Pascal, I think, right? No, Nico, Jeff, Pascal. Go ahead.
Hey, hi. Thanks for having me here, for allowing me the question here. Just, I'm curious, we were talking about maximalism before, and also the store of value of narrative of Bitcoin. But I'm curious on how do we, so there is a big market out there with people coming from mainstream into CeFi, DeFi, on whichever blockchain, making all kinds of trade-offs. Maybe it's not transparent all the time. So what are those trade-offs? But it's been hard for us Bitcoiners to have a nice narrative on why they should do it on Bitcoin, why they should do it on RSK or whichever other project on Bitcoin. Because this maximalism thing, it makes you like every time you critique anything, then it's like, oh, the Bitcoiner comes again. So here is a maximalist. So it's been hard for us to also change our positioning, saying, hey, I am a Bitcoiner and I also do DeFi, but I prefer doing DeFi on Bitcoin, on RSK, on Sovryn, because this is the value that I see compared to others. So I think that's where I'm curious on your perspective on how we build that narrative, so we can just move away from maximalism in something that is okay to share our perspective and compare with other blockchains or other projects.
Yeah, I think the way we do it is we inspire people with a vision of a better future. Because I think that's why people are interested in Bitcoin. I mean, look, there's people who are interested in price go up, NGU technology. But the people who are very, very short time frames and, they want to 10x their money, they're typically going to be more attracted to other things, right? They're going to be attracted to small new projects where they feel like they can get on in the ground floor and they can buy things cheaply and they can maybe see it go 10x or 100x. And that's, one thing that I can say about the way we should be looking at the industry and the economy that we want to build around Bitcoin is that we shouldn't judge the success of projects based on their success today, because the success of projects today is completely based upon what 20-year-old dudes with very, very high risk appetites want, and they are not representative of the world. All right. So one way that I describe this is, if you have $1,000, then it's very, very likely that what you're going to try and be interested in is, how do I make some high-risk bet where I can 10x my money? But if you have $1 million, you're much more interested in being able to make 5% on your money on a consistent basis at low risk. And most of the people in the world, most of the money in the world, are much more interested in preservation and growth than getting rich quick. And so one way that I would differentiate it is the difference between DeFi, right, where D in this particular case stands for degen, and SlowFi, right, which instead of get rich quick is about stay wealthy or stay sovereign. And that is the market. That is, if you want to build an economy, that's what you need to be building. You need to be building the tools that are going to provide transparent risk, low risk, consistent returns, and people will be happy if it's easy enough to use and understand, accessible to everyone, uncensorable, And I think that's what Bitcoin is. And Bitcoin remains the largest asset in the space, despite, not having all of these other, bells and whistles, precisely because that is always going to be the biggest thing that people are interested in. And right now, Bitcoin represents it more than anything. And so what's important for us as Bitcoiners is to continue to build tools around Bitcoin that is going to make Bitcoin be able to provide that to everyone, but particularly to ourselves. I think that's what we probably are interested in. And when people say to us that we're boomers, we should take that as a compliment, because boomers run the world and they're the richest generation ever. So I think, if you look at like what Sovryn is doing, it's attempting to build out those technologies that are going to be useful to people. Those products are going to be useful in generating relatively transparent, secure, and consistent yields, and are based around preservation and growth of wealth for the long term. And that's the key thing, right? Having a long-term view. And I think that's something that we need to educate Bitcoiners about, is that the way you attract people to that is not by shouting and screaming at things that are a scam, but by showing an alternative, right? And really, the people who have very, very high risk appetites and are currently on crypto Twitter, the degen crowd, we don't need to, it's concern trolling to pretend that we want this to protect it, right? That's not really what we're trying to do. We're just concerned, or we feel that money that is going into all of these other things isn't money that is going into Bitcoin. But that's fine. Gambling right now is porn, in the same way that porn was to the internet in the early days, right? Very, very important. Still, porn represents the vast, maybe the biggest amount of data transfer after BitTorrent is on the internet remains still porn. But it's not the use case that most people use or even think about when they think about the internet today. So I think it basically comes down to building fundamentally transparent and accessible financial and economic tools for the world, which are based on consistent ability to grow in a reliable manner, rather than just vomiting tokens and spinning up new projects all the time to create new tokens.
Thanks, Yago.
All right. We don't have much time. Jeff, go ahead, shoot your question. Abdul, since Pascal
Thank you.
is gone, you go next, so be ready.
I appreciate it. Yeah, I really appreciate the ethos of Bitcoin, decentralization, security, all that. I have some as well. I just want to ask your opinion on Algorand, since it doesn't fork like other chains. What are your thoughts about a lot of money from derivatives and commercial real estate, moving on chain and arriving there, and your thoughts on the future potential for interoperability? I've been reading about state proofs, which seems interesting. Just wanted to hear your thoughts.
Sure. So I think, generally speaking, my sense is that pretty much all layer ones are overvalued. I might be wrong. I could see scenarios in which, we live in a multi-chain world, and each of these chains manages to carve out for itself a specific niche, and but that's a pretty it's a pretty disjointed world, and I don't think we've really seen any network technology work that way, right? I mean, the reason the internet was successful is because you can be doing Facebook, you can be doing Airbnb, you can be doing BitTorrent, but you're doing it all on the same protocol. And so each one of these applications knows where it needs to point to. It needs to point to IP protocol, right? Whereas if you start dicing up all of the different use cases, right? Different economic use cases, different gaming use cases, different NFT use cases, onto different base technologies, then you don't get that interoperability. I don't think you get network effects. And I don't think it ultimately ends up being that attractive. So I suspect that what we're going to see is we're going to see a high degree of consolidation. Now, there's a second factor which I think is going to mean that we're going to consolidate around basic protocols, which probably I would say the most likely one is Bitcoin because it's been around the longest, it's the least changing, right? And this is that when you are a large company, if you're a Facebook or if you're a JP Morgan and you need to build substantial technologies, you need to know that they're going to last for, the underlying technology in which you're building isn't going to change. Not in 10 years, not in 20 years, not in 30 years. And so you really want to build on something which isn't changing frequently. This is particularly true of when you're building financial systems. Financial systems at banks, right, still use COBOL as their core programming language because you don't change core banking systems. And then there's a third thing, and I think this is maybe the most important of them all. All of these technologies are open source and they're commodities and they are being copied easily. And so anything that is created by one which does prove to be advantageous is copied by all of the others. And so I think that the applications that are being built on top of these layer ones are likely to have greater degree of survivability because the layer ones themselves go in and out of fashion, but the use cases don't. So that's my overall thesis, and I think that's a big part of why I believe that ultimately that we're going to see a snapback to Bitcoin. I will say that there is a way that this could play out differently. First of all, it could be a snapback to something which isn't Bitcoin, and it could also be the case that different industries decide to come together around different chains because they don't want to open up. But I see those as less likely scenarios and also less desirable scenarios.
I agree. And, as a layer one, it is created by Sovryn. He's a Turing Award winner. And if you dive into the Bitcoin white paper, he's hidden in there if you do a little bit of investigation. But actually, like the on-chain activity for it overall was 4.5 second, finalization on the block. But 300,000 transactions daily 3 months ago. Now it's up to 5 million daily. So just wanted to leave you with that. Appreciate your time.
All right, looks like we're about to finish and we don't have any any more questions. So Iago, you want to shoot some final words before we wrap it tonight?
Sure. So yeah, I think it's been an interesting conversation. My sense, we don't know what the future is, and a lot of these conversations are trying to explore different ways in which the future can happen and in which the future can arrive. And I think for me, the biggest thing around it is nothing is written in stone, right? Bitcoin isn't inevitable. The future isn't inevitable. Nothing is inevitable. Ultimately, things are possible, but that's down to us. And I think that if we, for me, hyper-Bitcoinization is possible. And it doesn't mean that everything's going to be Bitcoin. I don't think that's possible or likely. I think, however, that Bitcoin can sit at the core of, both in terms of an asset and in terms of a protocol of an open, permissionless, and global economic system. And even more than an economic system, a system of borderless institutions, just like Bitcoin is a borderless institution. And I think that's an extremely attractive vision, right? The ability for us, because what it ultimately means is that instead of having institutions and our money decided for us by where we grew up, where we were born, or where we live, right? Instead of having our citizenship and our membership belong to a sovereign, right? And we belong to the state, and the line is, don't ask what you can do for your country, ask don't ask what your country can do for you, ask what you can do for your country. I think it needs to be exactly the opposite, right? And I think the way we get there is by creating institutions which aren't based in geography and aren't based in violence. They're based on cryptography and they're based on the internet. And as a result, they can't force anyone into anything. And so they need to compete for members, citizens, users. And as a result, it becomes the institution is no longer the sovereign, it's the user or the individual that is the sovereign. And I think the way that we get there is by building that. And I think that that is the core of the ethos of Bitcoin. And I think we don't get there unless we build it together. And so, my vision for 2022 is that we continue to grow this idea in the Bitcoin community and beyond, that is the goal, right? It's to create a world in which the individual is sovereign, and yet we can still coordinate and have ways to collaborate amongst ourselves voluntarily. And so that's my big hope for 2022, that we create more ways for people to stay sovereign.
All right. Thank you very much, Iago. It was really an amazing space, in my opinion. And some final announcements for you, Sovereigns. You should know that we're not going anywhere, and these sovereignty spaces are going to continue. We're getting some really good comments from you guys. So thank you, first of all. Please make sure, if you're here and still haven't followed us, just go to our Twitter profile right here, click follow. And on our bio, you have a link with all of the social media channels that we have, our website, our DApp, all of the links that you need regarding Sovryn are there. So make sure you check it and follow us on all the channels. I hope you enjoyed this space. We're going to have another space on Wednesday, so 2 days from now, with Jamison Lupp, the one and only. Jamison is widely known cypherpunk who tested, I think, all of the metal seed storage devices. So he's going to tell us a little bit about that, about Bitcoin privacy, and much more. And next week, we're going to meet you here again with Crypto Wendy and Natalie Brunel, who we mentioned earlier before in this space. So we hope to see you soon. We, again, appreciate you all being here, joining us, asking questions, and staying sovereign. Have a great evening. Bye-bye.